Okay, here we're going to deal with taxation paid, which have to be disclosed in the statement of cash flow. Just a quick one. My beautiful boys and girls, the difference between cash flow statement and income statement is that the income statement shows every money that accrues to that particular year. Whether we have paid or not paid, as long as it has to do with the business of that particular year, we have to disclose it. The cash flow statement talks about the movement of money, the actual money that we paid or received. Whether we paid for next year or for last year, or we received for next year or for last year, as long as the money has been received or paid this year, we are going to record it this year in the statement of cash flow. Right. Now, let's deal with tax. You see here, we are given information in the statement of financial position as at or on 28 February. Now, 2023. Now, the closing balance in 2022 is the opening balance in 2023. So the balance that we see here are the closing balances in 2023. These are the opening balances because they were closing balances in 2022, so they're going to be opening balances in 2023. Right. We have this balance here. SARS income tax. We have the opening and the closing, of which this is the opening balance, this is the closing balance. Where are these balances sitting? In the statement of financial position. So, in the statement of financial position, under which section is this account, SARS income tax, sitting? It's under liabilities, current liabilities, if it is credit. If it is debit, it is under current assets. Right. Debit means that is an asset. Credit means that it's a liability. Right. So in a nutshell, what we are saying is that at the beginning of the year, we were having a balance at SARS. SARS was owing us 42,500, meaning that we have paid more than what we were supposed to pay. And what we are saying here is that at the end of 2023, we had a liability, meaning that we're still owing SARS. We didn't pay them enough. Right. Now, this is the net profit and income tax information that we have. And what are they telling us? Net profit after tax amounted to 912,500. And we are told that income tax is calculated at 27%. We are not given the tax liability for the year. We have to calculate it. How do we get it? Remember, just before on your income statement, just before tax, just underneath there, you have your you have your tax. No. You have your profit before tax, and then you have your tax, and then you have your profit after tax, or profit for the year. Right. So what are we given here? We are given net profit after tax. So meaning that we are given this figure here. $912,500. We know this minus this is equal to this. And we know this tax is 27%. Is 27% of this, meaning that this is 100%. This is 100%. And this is 100 minus 27, because remember, to get this is this minus this. So also in percentage is 100 minus 27, we get this one. 100 minus 27, how much is it? 73. This is 73%. Right, so now what do we have? We have 73% and we need 27. So what we need, we put on top, divide by what we have, multiply by the figure that we want to calculate the amount for. The figure that we have, that is represented by the denominator, and then we put the numerator here. Right. Let's see how much is our tax. 912,500 multiplied by 27 divided by 73. We get our 337,500. This is our tax. 337,500. 337,500. So, how much was our profit before tax? We don't need it for this question to answer this, but we can find it, isn't it? Because it's this minus this is equal to this. Or we can just say we need 100%. Let's say now we need 100% from our equation. How much is it going to give us now? 912,500 multiplied by 100 divided by 73. We get 1,250,000. Now, $1,250,000. Let's prove, no, this one does not have brackets, sorry. Let's prove this. This minus this, is it going to give us this? 1,250,000 minus 337,500. It gives us 912,500. Right. So this is our tax liability for the year. Right. Now, how are we going to work on it? I don't want you to memorize this, guys. I want you to understand. Opening balance plus liability for the year plus tax for the year is equal to closing balance. Right. Our opening balance is 42,500. 42,500. And our tax liability for the year is 337,500. 337,500. And then our closing balance is 27,800. 27,800. Now let's make logic of this. At the beginning of the year, we had a balance which was a debit balance, which means that they owe us. This year, we had a liability, which is this much, but they still owe us. Now, this means that if we have incurred another liability, but they still owe us, it means that we can offset these two and get how much do we actually owe them. Let's do this calculation separately. 337,500, but they still have our money. So how much do we actually owe them? How much money of ours that they still have? 42,500. And then how much do we get? 337,500 minus 42,500, 295. This is what is actually due to SARS. Right. Now, the closing balance is 27 and it's a credit balance, meaning that we owe them. So, if at the end of the year we owe them this amount, and this was the balance that is due to SARS this year, then how much did we pay? I'm repeating this. This is the liability that is due to SARS. At the end of the year, this was due. How much did we pay? Remember, the question is calculating taxation paid. So, our liability was 295,000. Now it went down, so we're going to say minus 27,800. The difference is 267,200. So it means that this is the amount that we have paid. Now, let's go back here. Now, let's go back here. Those who like to memorize. Opening balance is a debit. It reduces whatever liability we're going to have this year. So we're going to put it in brackets because it reduces. Now, this is the taxation for the year, which increases the liability. Now, when we want to see how much we paid, we are going to say, this is our liability. And if this is our liability, at the end of the year, we had this liability. So, if you can see, this is more than this. It means that these liabilities have been reduced to this liability. So, now, we want to know how much has it been reduced by. Then we're gonna put brackets here as well. Right. I'm just doing this for those who like to memorize, but I don't really like memorizing, ne? But yeah, others it worked for them. Right. And then we are going to say negative 42 500 plus 337 500 minus 27 800. Then it gives you a taxation paid of 267 200. So it means that if you want to memorize, if the opening balance is credit, you're not gonna have brackets here. If your closing balance is debit, you're not gonna have brackets here. That's if you want to memorize. But I want to believe I've explained it initially in such that it is understandable and it makes sense. Thank you very much.